They redefine style, leisure, and performance. But fashion is fleeting, and customers must be won over and over again. Will trends change anew, or is Lululemon flexible enough to stay en vogue?
Holy cow, what just happened to the stock of Lululemon? Last night, the yoga-inspired apparel chain reported a decent quarter, but gave dramatically weaker than expected guidance. Stock just got eviscerated, plummeting over $15, 23% down in one day. How bad is it at Lulu, really? While the analysts were looking for a low to mid-single-digit increase in same-store sales for this current quarter, Lulu forecasted the exact opposite, a low single-digit same-store sales decline, along with much weaker than expected sales and earnings. It was a shocker. On the conference call, management talked about slowing sales trends with weakness in e-commerce and soft traffic in the stores, a double whammy, even as it reiterated the entire year would be a strong one. Still, the bulls ran for the hills, concerned that the Lulu magic was gone, a victim of competition, copycats, and a sluggish consumer who's abandoned the mall. Still, when I see a move like this one, I always wonder if the market's overreacting. Could Lulu recover after a seemingly slow start to the year? Does the stock deserve to rebound from these levels? Earlier today, I got a chance to check in with Laurent Poitevin. He's the CEO of Lululemon, and he helped me make sense of what's happening. Take a look. Laurent, after a fabulous run, just a great couple of, let's say, years, you reported a number that was good, but you gave us dramatically weaker than expected guidance. Help us here. What's happened? The stock's getting killed.
You know what? We've had an incredible Q4, an incredible 2016, as you mentioned. I'm super grateful for the team. I mean, for the first time, we're returning to earnings growth since 2013. We're a little disappointed. Obviously, we're not satisfied with Q1. We had a slow start. I mean, it's a smaller quarter. We identified the issues very early on in the quarter from an assortment standpoint and from a visual merchandising online. And we've taken drastic steps to fix it. From a color standpoint, the progress that we've made with our supply chain has actually allowed us to address the color right away, and we're seeing new colors hitting next week. And we've taken steps on the visual merchandising side to really shoot more creatively, more powerfully, both in Vancouver and in Los Angeles. And when we brought that imagery and that creative to life, I mean, we've seen drastic increase in performance right away. So we're early on in the season. When you look at the guidance for 2017, I mean, we're guiding double-digit revenue increase with earnings that are in line with the revenue growth. So I feel really good. And 2017 is actually the year that I'm most excited for since I've been here starting in 2014. I mean, we've got an unprecedented cadence of product launches, both from an innovation and from a design standpoint. And in May, we're going to launch our very first global brand campaign. And we've got an amazing creative partner that has probably the largest reach to put eyeballs on the brand and millions of consumers.
Okay,
so
Lauren,
I can't wait to see that come to life.
All that sounds terrific, but we have to deal with the idea that there was such a sudden shift. Was it the fickle consumer? Was it something you did wrong? I felt the health and wellness theme was a great secular trend, that you were behind it, that you were riding it. But there are a lot of players now, New Balance, Sweaty Betty, Athleta, Old Navy, J. Crew, Bandier. Have they caught on to what you're doing?
You know what? I don't think they have, and there are a lot of great brands out there, and we continue to lead the market. I mean, there is no doubt in my mind that the healthy, active, mindful lifestyle that we created, we continue to lead that. I mean, I see the strengths of our business in China. I mean, our business in China is on fire. And I would point to the fact that when you look at the performance of our product, our anchor categories for women and men, so if you think about women's bottoms, women's bras are comping plus 20, women's bras are comping plus 10. Our men's business is comping plus 20. So the anchors category that really define the active, mindful lifestyle and the market that we continue to lead are actually very strong. We've got some work to do. We own it. We're disappointed, but the fact that we own it also means that we get to fix it. And I'm very confident that we've taken the right steps to do that.
If that's the case, then it would seem like that a stock that is down this much is a dramatic overreaction. You have a buyback. Will you be in buying back stock, given the fact that you still expect this year to be great and that the quarter has already picked up that we're in now?
You know what? On the actions that we've taken, the performance of the product has already picked up, and right now we're buying back as much stock as we can under the plan that we've got in place.
All right. Now, do we have to think that perhaps the traffic in the mall is something that you can't do anything about? Mall numbers in February down. Some people say, like Nordstrom, worse since 1972. What can you do to buck the fact that you are, in the end, in the mall besides the catalog?
Well, you know what? We're halfway in the mall, halfway in the street. You've got to remember that we've got a very light physical footprint, and we've got a highly physical footprint. I'm actually incredibly proud about the innovation and the curiosity of our real estate team and our operators. When you think about the evolution of our physical footprint, I mean, we're going to grow the square footage about 10% this year, and what we're doing is that we're evolving to those co-located stores. So those co-located stores are taking our stores that are like highly profitable, that have very healthy traffic, and we're making them bigger. So where everybody is closing and going smaller, we're actually doubling down in the stores where we have tremendous performance. So Mall of America is a great example where we've increased the square footage by 35%, and we've seen the men's comp grow 70% with the same level of inventory. So a very light footprint, very highly productive footprint, and we're optimizing that in a really powerful way. So retail is not dead by any means. I think that Lululemon is best in the world at human connection and product, and the performance that we see in a very difficult environment speaks to how well we're doing in that segment.
Right. You have been, I think, very forthcoming in saying you own the disappointment. I come back and say, Laurent, I know, does not miss the market that badly, does not get the fashion that wrong, knows the colors, knows when to be bold. If it can be this fashion-oriented, how can we pay a premium for the stock? Because it seems like now there is far more risk than I realized.
You know what, I would point back to, I mean, we've always lived in a really unique and beautiful way at the intersection of function and fashion. Look at the launch we had yesterday with New Looks, brand new fabric that sort of comes right after the Align pants last year and Nulu. I mean, in 2 days, the Tide and the Crop are already the #1 selling product. So I would go back to the anchor category, the runway of innovation that we've got coming this year. And we know for a fact that when we deliver innovation, and that innovation intersects beautifully with fashion, our guests respond very powerfully. Disappointed with Q1, and again, we've taken the steps, and online is probably the quickest fix that we can take to sort of put things back on track. So I'm excited about 2017 in a way that I haven't been excited so far, given everything we've got ahead of us for 2017 and beyond.
All right, I just want to go on record my last question. It must be clear that the last few weeks of March had to be good, and your expectation for April is to continue, or else you would not be as confident on this show right now if that weren't the case.
The steps that we've taken to be more creative with the product, to bring colors, we've seen instant pickup in our performance. So yeah, I feel very confident about the steps that we've taken and how quickly they've had an impact on our performance.
All right, let's leave it there. And once again, I think that you are very forthcoming in what occurred. And as you said, you own it. Let's see what the viewers say. That's Laurent Poitevin. He is the CEO of Lululemon. Down badly today. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.